crypto holders, after weeks and weeks and weeks of just the unknown of what actually happened and what is going on in this crypto market, why are we seeing price fall so quickly? Why are we seeing basically none of the things that we have seen, basically all throughout the rest of the cycle as we see this dip in Bitcoin's price? And I think we actually might have a reasonable answer to, and it's kind of a two-parted answer. And so I did want to go through and talk about that today. But if you do hold crypto, if you are invested in the crypto market, you need to watch this because this is a super, super important video. I think whether you agree with my opinions or not, I think that there's a lot of very, very good information in here that will help you make a decision on what you might do next. And so it's very important that you stick around. We're going to be going over kind of the two key pieces that we're seeing happening going on kind of in the crypto market right now, which are causing people to have all of this selling, and why basically crypto and Bitcoin specifically as a whole is just kind of sinking like a rock. So let's go ahead. We're going to jump right on into this. Moving on, we have basically you could see on the prices today, basically another red day, super red week, and then of course a really, really red month. We have a couple greens here and there, but you'll see a lot of the majors across the board just really getting crushed. You can see Bitcoin down 23%, ETH 28, Solana 33, Crow 31, BNB 25, SHIB 24, Doge 28. I mean, just massive sell-offs kind of throughout the entire market. We can see even here we've got ADA down almost 40%. I'm not seeing XRP in the bubbles here right now, but I'm sure there's people who have found it already, but XRP kind of down a similar amount as well. So it's been a really, really difficult time in the market, and there's kind of two reasons here that I think that we're seeing as to why this could have happened. And so the first one we're going to talk about here is actually summarized in a nice little thread here by Fallen. I have reposted this as well, so you can kind of read up more about this. This has started to be covered. I'm seeing this kind of covered on some of the larger channels, like Sam or My Financial Friend or Austin Hilton, people like them. So you may have already heard some of this. If so, I'm going to kind of abbreviate it slightly. For those of you who haven't, feel free to check out kind of the details here. But what you can see here is that one tiny bug essentially is what caused the October 10th just absolute capitulation within the market. It all essentially started where a stablecoin briefly showed 65 cents due to some liquidity struggles on a major exchange. Now, this is not a real DPEG. This is just essentially they took the price feed from their internal exchange rather than an aggregation of price feeds from various exchanges. And so essentially the liquidity issues they were having specific to their exchange looked like there was some like catastrophic event happening throughout the crypto market. And again, since a lot of crypto is programmatic, that just kind of set off the domino effect, right? And so because of that bad price triggered chaos, and the auto deleveraging forced liquidations on derivatives. So from there, essentially they were calling on liquidations on their exchange, and then of course that forced price down, which led other exchanges calling liquidations on theirs, and then on and on and on. And you could see around 2 million accounts got wiped instantly. That is that day where we saw $20 billion in leverage liquidated. And again, that came from close to 2 million accounts. So that, of course, was an insane drop, and it really kind of broke the back of the market from a fundamental level. And it actually was kind of worse than many of us expected, kind of looking underneath the surface. And so you'll see here, the liquidation shockwaves hit the other exchanges. Once the ADL cascade started, it spread across multiple venues. And of course, we were having outages and a whole bunch of different stuff. But it's essentially exchanges structurally prone to ADL events are major offshore derivatives that rely on ADL and internal feeds, things like Binance, OKX, Bybit, on and on and on. And here is the really major part here, as you can see that market makers actually got crushed in this. The ADL cascade blew holes in their balance sheet, and they really couldn't trade. And market makers, if you don't understand, basically are like the central bank of crypto. They are essentially kind of what provide liquidity. They provide price stability, generally within ranges where possible. Obviously, there can still be short squeezes, long squeezes, all of that type of stuff, but they do help provide liquidity in the market so it moves a little bit more stably. And what happened is, since the market makers got smashed during this liquidation cascade, it essentially, they haven't been able to trade as normal here, which is kind of why we're seeing some of this like volatility and the kind of not respecting various points of support and resistance and all of this type of stuff in the market, is because they can't trade like they normally would be able to. They have to repair kind of the holes in their balance sheet before they can resume trading as normal. And so basically that's been happening over the past 6 weeks. They've been been selling inventory, reducing leverage, unwinding positions, pulling liquidity, and shrinking their balance sheets. And that has essentially caused this liquidity hole that's been happening in crypto, in addition to the government shutdown, in addition to concerns about AI and all of this type of stuff going on. And so you could see, this is, these are kind of some of the main ones that were exposed, and then some others that were also strongly exposed. So again, thank you to Fallen for tagging me in this. Very, very helpful, type of thread here that you can see, kind of explaining what happened. And now, of course, Tom Lee did go over a little bit of this on CNBC, excuse me. I'm dyslexic today apparently, but that is essentially kind of a similar type. He was telling essentially a similar type of story of what is actually went on here and what happened. Now, Tom Lee had made the mention that it would be about an 8-week process to fix. If we are looking back on 2022, that is essentially how long it took in 2022. This was 6 weeks ago, so there is an estimation that we could have around 2-ish weeks left before we see a lot of these liquidity holes repaired. Now, there's also another thing that is happening at the same time that is causing a lot of this type of stress within the market, and I want to talk about that as well, because if we go ahead and we just take a quick look at Bitcoin price, you'll see it's basically been down only. This is when that liquidation event happened. We saw a little bit of holding up here, but then since then, it's just basically been down only. We've really never seen this level of selling off just kind of in a row. Usually we have, price, respecting various levels. Sometimes we bounce. Even if we break through certain levels, we'll have kind of runs back up. We'll see the market chop around. That is not the case currently. It is basically just down only. There's nothing to stop it. And as we talked about, $20 billion of leverage was liquidated, and market makers got a huge hole blown in their balance sheet. So there's really nobody to buy the dip here from like a structural level, which is part of why we're seeing such a free fall in price, is kind of what I'm gathering from a lot of what we're seeing here. Now, that's important to understand because we also have another thing coming up as well. And now this is also in my community Discord. You can see Cade's Crypto Corner up here. I do have links basically in all of my different social medias to check this out if you are interested. But you can see here Tooth, who's a super, super valuable member of the community. Really, really great. You can join on in and kind of join the conversation here, but they posted a super valuable kind of thread on what is actually going on right now. And you can see here is that a big rule change aimed at crypto-related companies quietly went into effect on October 10th, right in the middle of the liquidity crisis. That's why you're seeing massive sell-offs today in stocks like MicroStrategy and Mara, or Marathon Digital. The key issue is that MSCI is targeting crypto stocks. Now, to be clear, this is still a rumor. We haven't seen really anything confirmed about this, but again, usually news follows price. And so the fact that it's just rumors means that, that could be kind of people trying to justify why price is moving. And what you can see here is that the MSCI is essentially the group behind major stock indexes, and they're considering removing crypto-connected companies and ETFs from major indexes like the S&P, the NASDAQ, or the Russell 2000. Their decision will be finalized on January 15th. So what this means to me is there could be kind of extreme volatility between now and then regarding the decision here. I don't really quite understand the rationale for the decision. We don't really have much context or background as to why they could be even going over this decision in the first place. But overall, that this is essentially kind of the rumors that are circulating. And if MSCI approves this change, most indexes will be forced to sell all crypto-related holdings. That means automatic mass selling of MicroStrategy, Marathon Digital, Riot, some crypto ETFs, and all other companies holding crypto in their treasury. This creates a forced liquidation wave, not just in stocks, but across crypto itself. Again, that is kind of the fear here. I think, again, we don't really understand the total rules or the scoping here. So even companies that hold crypto in their treasury, I'm not sure if they would fit in that category. Who knows for sure? So there may be some, there definitely is some level of speculation going on just in the overview here. But I think we can kind of largely get what the concern is here, which is essentially why does this hit crypto so hard? Well, if the indexes unload these stocks, obviously automated trading systems, market makers, everything will, everybody will have to rebalance everything, which means triggering selling in Bitcoin, Ethereum, Solana, Caspa, on and on and on. Any project tied to ETFs, mining companies, this could be a huge, huge event, especially as we have started to see the institutional adoption of crypto. That, that would make it just that much worse. So we have to be very careful and make sure that we're not kind of getting too crazy or we don't see anything super crazy happening like this, which is of course going to be causing a level of caution in the market until we kind of get that January 15th vote. Because and then, you know, there could be some just major moves kind of prompted for kind of early next year. So just want to show and share that with you as well, because we have a lot of really interesting things going on in the market. We obviously have kind of the structural hole and the structural issue kind of prompted by that mass liquidation event, but then we also have this upcoming issue where essentially all of the institutional adoption we've been seeing so far could immediately get unwound in terms of how indexes are concerned, like immediately, which would be really terrible. Because the other problem as well, particularly with companies that have Bitcoin or crypto treasuries, they will probably just unwind their crypto treasuries, because it is very likely having access to being in these index funds is far more valuable than holding crypto. And so I think this could be, you know, again, if we're going to put our tinfoil hat on and go into conspiracy corner, I think this could be, you know, kind of some coordinated attacks by people in institutions that may not like crypto trying to hold it down. I personally am not super concerned one way or the other. I think crypto is kind of proven its merits at this point. And so kind of if that happens or not, yes, of course, it will cause major sell-offs and pain in the short term. But in the long term, I think that overall, you know, we will see a recovery. It just will depend on how long and how crazy things are going to get before then. The other thing I want to just kind of go back to and return to before we wrap the video here is the Bitcoin chart, because we can see here we are at an RSI of 22. I think this is the lowest we've seen since, I mean, I guess we saw a little bit here. This was actually 24 during the tariff crisis. But yeah, I mean, basically you can see here that this was probably the low before that, which was 19, and that was in August of 2023. Again, this was kind of like the mass panic event here before we saw just that absolutely insane move back to the upside. This was kind of not necessarily the trough of the bear market. We could also see RSI was very low here when we basically were almost in the trough after that final sell-off due to FTX. But the last time was here, and look what happened next, an insane run up. So I'm not saying that that's what's happening now, but this is essentially the lowest we've ever been on RSI since this happened, back when Bitcoin was at 25K. So again, you know, we'll have to see kind of what happens. Obviously, from a structural level, I feel like Bitcoin is in a much better place. It's obviously at a level that we last saw at 25K, now at 84K. So that does feel pretty good. But again, we don't exactly know where the bottom is. There is that possibility that we come back down. Maybe we see like the, you know, high to mid 70s. Maybe we've seen a bottom. It's very hard to say for sure. Yesterday, we did have that massive liquidation wick, liquidated $2 billion of crypto. So there is definitely, I think, kind of a max pain type of feeling in the market. We'll just have to see if it continues further on into the future. Of course, nobody knows. I can't tell the future, and neither can anybody else, as far as I'm concerned, or as far as I'm aware. So overall, hopefully you found the information in the video useful. If you did, of course, you know what to do. Like, subscribe, share, do all that type of stuff. In my opinion, this is super important information. So if you would help out by sharing this to other people involved in the crypto market, it would be very helpful, because this is essential information in my opinion. So let me know if you have any other questions. Of course, feel free to drop those in the comment section. And thank you so much for tuning in. We'll see you in the next one.